Today is Saturday, June the 12th, and I'm going to tell you today what I tweeted yesterday afternoon, and that was that I went to 50% cash, and I sold 300 shares of Plug, 400 shares of Square that were covered with 250 calls somewhere out in the fall. This Kathy Woods ETF, and I took a bath on all of these. Apple, I had short calls at 135s, probably in October or something. I sold 600, and I sold the call spread 130, 135s that I had at 6 of those. So I got out of all of those and I raised 50% cash. Now I'm going to tell you why I did that and what signs I saw. And I guess the tipping point for me was when I watched a video yesterday by Ask Slim, ASKSLIM. He is a trader that I've been following for quite a while, and he was pretty negative on the market just from a site, and he looks at cycles. But you've also got McClellan here, who is talking about the Fed propping us up, and his charts showing that I showed you probably on Thursday with the relationship between quantitative easing and let's just go take a look at that. The relationship between quantitative easing, quantitative tightening, and the market. And look at how the market is just so high right now. It's really come back from this COVID thing to the point where it's a bit of a concern. And you're going to see it also in the volatility index when we go look at it. But here's what I saw in the McClellan oscillator. I saw this choppiness back here last fall, coinciding with this high and then a drop. I saw this choppiness, see then the McClellan oscillator dropped and really didn't recover for quite a while. I saw this choppiness followed by the drop in the McClellan oscillator. Now I'm seeing it again. My own personal trading account had highs here, 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 and then I hit that same high on Friday because it was a really good day and it was a pretty good week, and I said, I've hit that number now 4 times this year and I keep being pulled back from that number. So I'm going to take the gains that I have, even though I took a bath on these stocks that I sold. I'm going to take my gains because remember, I've been covering these with short calls for a long time, and my short call premiums have been more than enough to cover my losses. So now I'm sitting on 52% cash, and I'm going to wait this summer and see what happens with the Fed. And it might not be until September or October when I jump in again, other than for very small short-term opportunities like maybe a few days. So here's what I see in the charts. Let's start looking first at the volatility index. The volatility index is way in what we call this complacent zone right down here. When it's this volatility index is this weak, the market moves up quite nicely. But Warren Buffett will tell you when people are giddy and buying hand over fist, that's when he tends to step back. I'm not Warren Buffett. Dow Jones, look at that. The Chiku span up here is running into these candles. It's unable to make a new high, but the 50 moving average and the cloud are colliding here, and coincidences like this and the 138.2% Fibonacci, coincidences like that are always opportunities for the market to say, let's test and see if the support is still there. Now that's the Dow Jones. Let's look at the NASDAQ. The NASDAQ Chiku span is up in the clear, and so is the stock. Is there any reason to believe that the NASDAQ won't come back to make a double top? I think, frankly, it will. Look at the 50 moving average within the cloud, and it's hitting the top of the cloud. I've not spent a lot of time noticing what the moving averages do in the clouds. I look more with what the moving averages do with price and with the Chiku span. But it's just another coincidence, and I add that to the basket of coincidences. So we get to the S&P. S&P did make a new high. It eked out a new high, but only barely. And it pretty much ended at its high of the trading day for Thursday, but a little bit higher than it was on May 7th and May 8th. So you'd say Ichimoku span in the clear, new high. Why wouldn't we stay invested? Well, look at the 50 moving average. It's also running into the cloud. And I just believe that it's one of those coincidences where the market's going to say, we've had some gains. Let's come back. It's not far to pull back, but let's just come back and let's see if there's some buying where the 50 meets the cloud. Apple. I got out of Apple, all of it. It's stuck at the 50. The legislation that's running around in the House and the Senate, which has bipartisan support, calls for Facebook, Apple, and Google to be broken up, possibly forcing Apple to sell the App Store. Can you imagine how ludicrous that is? And the likelihood of that happening is probably zero, but it's enough to cause some concern in the market, I believe, coming up. IBM, I kept my stock in IBM because it's a good dividend provider. Apple's not a dividend provider. I kept my stock in NEO because it had a tremendous day on Friday and it's poking above the 78.2, even though the stochastics are both showing overbought. Square, I got out of half of my positions for Square. We have the Ichimoku span underneath the candles, and we have rejection on the 50 moving average, and we have this faster moving stochastic coming down. Although the slower moving stochastic has bottomed out, there's still a period of a cycle, a bit more for Square to go down. So I sold half. I kept my position in Sava, which is a biotech stock, Alzheimer's. I talked about that one. It had a tremendous day on Friday, but we really also got to look at its volume. Its volume is pretty low. It did have a relatively high volume day on Friday, relative, but nothing like it was back here in the hysteria and excitement back here. But now it's starting to move up. I've kept my call spread, which was 60-80 in Sava. Maybe I'll buy more. Abbott, I let my stock and short calls expire this week, so I'm sold out of the Abbott position. There's a 50 moving into the cloud there as well. AT&T I kept because it's a great dividend stock, and if the market goes down, I think people are going to gravitate towards dividend stocks. Kept US Bank because it's getting support at the 50 and the cloud, and I would expect that to be material support, and we should see, if it were traded on a technical basis, we should see US Bank start to move up. Now, when the Fed starts to tighten and raises interest rates, that's when banks do particularly well. So I'm going to keep US Bank. I did get out of Plug because it's having earnings this week. Don't like to hold a stock through earnings. Both the stochastics show it to be in a cycle heading downward. It's in the cloud. The Ichimoku span has these resistances. It's just not a stock that I think is now. It might be a stock in the future. The technology is great, but nobody's liking the stock right now. Got out of it. PRNT, I think Kathy Woods is having her share of problems. She keeps buying, she keeps selling. People are going to get tired of her. She may have been a flash in the pan last year, and they may start pulling money out of her stocks. But look at PRNT, resistance up here on the cloud, resistance here at the bottom of the cloud, resistance around the 50. Just decided to take my losses, get out and raise the cash. MP, which I'm not into, has pulled back. We were watching it to pull back before we bought it. It didn't quite pull back to the 50, but the 50 is at the bottom of the cloud. And as I said, when you have moving averages intersecting with the cloud, they are a magnet to pull back. And we saw that happen exactly with MP. So hold on, that's not a stock ready to buy. In fact, I don't think the market is ready right now to step in on anything. The other one that I thought we might take a look at, SMTC, which was in this channel, has not broken out of the channel, has gotten cloud rejection on Thursday, 50 support on Friday. I'm still setting 68.76 to come back and look at it, but the whole market would have to be favorable for me to buy anything right now. 50% cash. So what am I holding? I'm still holding preferred shares in a mortgage REIT, AGNC. I'm holding the N, P, and the O preferred shares. They're all paying over 7%. I'm holding ETW, a Vanguard short call dividend fund, which is also paying 7%. I'm holding AT&T, which is still paying 6% dividend. I'm still holding half a position of Square. I'm holding my call spread in Sava, and I'm holding 1,500 shares of NEO, but I've got another call spread on that one, so I'm basically short the October 60 calls on my 1,500 shares of NEO. So I'm going to hold on to that one, but I'm 50% stock, 50% cash, just feeling nervous, but also feeling good about the account and how it's accumulated so far. I don't want to see it slip back again.